Many people express interest in learning how to trade because they perceive it as a potential pathway to financial success and independence. However, several factors contribute to the gap between interest and actually taking action. The first is the complexity. Trading involves understanding financial markets, analysis techniques, and risk management strategies, which can be daunting for beginners. Secondly, we have the time commitment. Successful trading requires ongoing education, monitoring of markets, and continual refinement of strategies, which may deter those with busy schedules or other commitments. Risk is another factor. Trading involves the potential for significant financial loss, which can discourage individuals from taking the plunge, especially if they are risk adverse or lack confidence in their abilities. Many have difficulty overcoming psychological barriers, fear of failure, hesitation to take risks, and emotional reactions to market fluctuations can impede individuals from pursuing trading seriously. Then there's the lack of resources. Access to quality education, mentorship, and reliable trading platforms may be limited for some individuals, hindering their ability to acquire the necessary skills and knowledge. Ultimately, while many express interest in trading, the combination of these factors often prevents them from taking concrete steps to learn and engage in the practice. nSights DeFi Trader offers several benefits for those interested in trading crypto in the decentralized finance space. nSights DeFi Trader allows users to automate their trading experience. This means users can set up their preferred trading parameters and let the software execute trades on their behalf. This automation reduces the need for constant manual monitoring and decision making, potentially saving time and effort for traders. Overall, nSights DeFi Trader offers convenience, automation, data driven insights, and risk management features that can benefit traders interested in navigating the decentralized finance space efficiently and effectively. Let's take a slightly deeper look at what nSights DeFi Trader is, what it is not, and how it works. nSights is not built to facilitate any type of futures or any other form of leverage trading. It is purely designed to place spot trades on a decentralized exchange, currently limited to PancakeSwap, allowing traders to capitalize on dips in the market by presenting buying opportunities and automatically selling at higher prices, repeatedly capturing profit from positive increases in the market. The nSights platform allows for a tremendous amount of trader input and customization. Although there are several categories of trading strategies offered by the platform, in this video, we will highlight one of the most popular to provide you with an overall idea of how using nSights may be of benefit to you and your trading journey. You may or may not be familiar with what is called grid trading. However, grid trading is a trading strategy that involves placing buy and sell orders at regular intervals above and below a predefined price level, forming a grid of orders. This strategy is based on the assumption that the price of an asset will fluctuate within a certain range over time. By using artificial intelligence, volume indicators, and other advanced technologies, nSights has enhanced this style of trading to provide trader-defined, hands-free trading at its best. Let's take an abbreviated tour of the nSights dashboard and see an example of how it works. I won't go too in depth with a walkthrough of the entire DeFi Trader back office, but only give you a glimpse of some of the things that are made available on your dashboard. You have your normal trading charts to be able to analyze the market and place your trades. We also have what's called a mid wallet because we're trading in the DeFi space on a 24-hour basis. For safety and security purposes, we're able to actually facilitate these transactions without having to have our DeFi wallets connected around the clock. We have an internal mid wallet that we're able to place our assets in and trade and withdraw from for our safety and protection. Then, because we're also trading in the DeFi space, decentralized exchanges, there's always going to be gas fees associated with our transactions. So we actually have an internal wallet separate from the mid wallet that we can actually place gas fees in, so that yet again we don't have to have our wallets connected at all times. And then we have our coin page. This is where we're able to actually go and make the selections of the different coins that we would like to actually place our trades on. This is the part of the overview that most people want to know and understand. Just know, for the sake of time, the nSights DeFi Trader platform comes with full training. It has over 2 years worth of training videos that actually walks you through how to set everything up. And nSights DeFi Trader has 2 training calls per week where individuals can, log in and actually see and get information on how to manage their trading platform. However, for the sake of time, I'm going to ask you to go with some assumptions with me, just to kind of help you understand the concept. Now, this is Injective Protocol, which is a coin that I actually have traded over the last 2 months, or actually 35 days or so. And what I did was, here on the chart, I'm using TradingView to kind of give you an example. I went back into February the 28th, which is around the time that I actually started trading this particular coin. And all I did was establish what the range of movement for Injective has been over the last 2 months prior to the day I was looking at it. And I was able to establish my floor here and my ceiling here. Some of you may call it support, resistance. Some of them call it trade barriers. Doesn't matter. All we're looking at is a range, and we're bracketing that range off. And in that range, what I want to know is we all see the ebbs and flows in the market. The market goes up, the market comes down, the market goes up, it comes down, so forth and so on, over and over and over and over again. So as a trader, what do I want to know? I want to know, when it makes this move, or one of these moves, how far up and how far down is it actually going? Because if I can determine what, on average, how far it goes, then I can tell my bot to track the ups and downs, and put me in and take me out of trades over and over and over and over and over again, as an example. So, how do we do that? For example, what I want to know is when it makes a move, how high does it go? Roughly 18%. Then what happens? The market pulls back. I measure. When it comes back up again, how high does it go? About 36%. Okay. I'm just going to zoom in here just a little bit to make it easier to see. Goes up, approximately 38%. Then it pulls back. When it pulls back, how high does it go? About 20%. Then what? It pulls back. When it comes back, how far does it go? I'll take this one. Come up. 21%. Then what happens? It pulls back down. Well, when it pulls down, how high does it go? About 13%. Pulls down again. Where's the low? Here. Where does it go back up to? 20%. As you can see, over and over and over again, we get a range. It helps us determine, on average, when it makes a move, how high it's actually going. Now, for the sake of time, I'm going to flip over to the next chart where I've already done here we go. I've done the same thing for when it pulls back. When it pulls back, how far does it pull back? 18%. What is this? 14%, 21%, 28%, 18%. If I were to go through and look, these are the numbers that I'm averaging somewhere in the neighborhood of about 18% on my pullbacks. What does this information do for me? It lets me know, now we're back to the original chart we were looking at, if the market is going up on average 18%, 20% on each move, historically, until something changes in the market overall, then it's probably a pretty safe assumption that we're going to continue to stay in that range, if you will. And if it's pulling back approximately the same amount, it is safe to assume that it's going to continue to pull back at that same amount. So if that's the case, 18% moves up, 18% moves down. Well, this is where the subjective part comes in for the trader. Some traders are going to be aggressive and try to get as much out of the market as they possibly can. Some are not going to be as aggressive and play on the conservative side, and anywhere in between. That's where the individualism comes into play with using this system and the customization, if you will. But for today's example, what I'm going to do is I'm going to go with 15%. Every time, you know what? I'm going to even be more concerned. Let's just say 14%. I'm looking for 14% moves. When the market goes up 14%, or what have you, and then, when the market pulls back 14%, I want the system to put me in a trade. When the market goes up 14%, I want it to sell. What does that look like? Number one, in nSights DeFi Trader, the back office that we just left, it's going to provide you with the data entry points where you're literally, all you would be doing is entering in, okay, when the market goes up, 15%, that's the profit that I'm looking for, or 14%, that's the profit that I'm looking for. But when the market pulls back 14%, I want you to enter into the trade. You're not charting, so to speak, in nSights. You may do your charting to determine what you want your parameters to be, but once you set your parameters, the system itself takes over from that point. So in this example, I rolled the clock back to February the 28th so that I could play it forward in real time so that we could see what the market actually did. Now, just as a quick example of what you're going to see, if you, let's just say this was the market and we were trading. I want to give you an example. What nSights DeFi Trader does on, and I apologize, I left this part out at the beginning. This is what we call a pullback grid. I'm looking for pullbacks in the market, and this is one of the most popular trading strategies that the platform actually offers. I'm looking for the market to pull back before it puts me in a trade so that my potential for profit is that much greater. So what the system will do is it will wait until a peak in the market has been established. And then it will measure from this point before it puts me in that trade. It'll wait till it comes down 15% and then puts me in that trade. So that's how it actually works. So that's just visual for you there. So now what we want to do is I'm going to zoom in a little bit so you guys can see it a little bit better, and we can measure and see what the market does. So let's assume that day, I'm going to slide this over. We're right here in the market. What I'm going to do is I'm going to go ahead and start time. And what we're looking for is for the market to give us a high. Every time it gives us a high, boom. So we can see here, now, we started right here. Did the market go? We didn't have a high yet, but did it pull back on us 15%? No, we did not get a 15% pullback, so the system would not have put me in this trade. Okay? What we're waiting on is this high. So this is the new high. So the system is now scanning for the price to come back down below 15%. So when price goes past 15%, it's going to put me in the trade. And we will see. If price goes higher than this point will slide over and give me a new high point because it's looking for a high to measure off of. All right. So let's see. Let's play it forward. Notice we got a new high here. So now we move over here. Now my 15% comes up. So the system would do all of this in real time so that you don't have to. All you did was you told it, hey, when the market pulls back 15%, put me in. When it go up 15%, take me out. And you're off doing what you like to do. And once the market comes down to that point, nothing's happening. Boom. Did we create a new high? Not yet. Yep. So see here, we created a new high. So now we're here. This is my new high. And my 15% mark is pulled up a little bit. So we're here. Just waiting. The system is waiting and doing it on its own. It's time, boom. As time went by, you will notice that once price came here, we hit the 15% mark. Now we're in the trade. Now what the system is doing is it's going to wait until the market comes up 15% from here and close me out. All right. Now, meanwhile, and this is one thing that I did leave out, let's just say when I'm trading this, I have the ability to determine how much money I want to place on this trade. How much am I willing to put into Injective for the platform to trade for me? You have to determine an amount. You can always change it, but to set it up, you have to determine an amount. So let's just say in this particular case, because we are grid trading, I get to tell the system, hey, I have $500 that I want to trade on Injective, and I'm willing to do 5. You know what? I'm willing to do 5 grid lines. That means that it would take my $500 and the system itself would do the math and the calculations and divide it up into $100 trades. If I said 7, it would do the calculations and divide it up into that, what would that be? $71.42 per trade. It will do that math for you. You just telling it how much you want to trade or allocate for this grid and where you want it to buy and where you want it to sell. And then it takes over and does all the rest. So we'll continue to play this out. And as you will see, I told the system that I was willing to do $500 and I'm willing to do 5 grid entries, meaning the system is still looking for peaks and pullbacks because I'm in this trade, but I still have money. I have $100 on this one. I still have $400 theoretically waiting to be placed. So once the market pulls back another 15%, it's going to put me back in the market again. But 15% from the previous peak. And as you can see, I'm back in. I'm back in this trade. Theoretically, and this is something very important that's different, as I mentioned earlier, from most grids. Here is where the artificial intelligence and other technologies that nSights has developed comes into play. Because most grids, if you said 15%, as soon as it hit that 15%, your order would trigger, but not with nSights. It reads volume, it reads pressure in the market, and so forth. So instead of with so much down pressure coming, nSights 9 times out of 10 would not have put me in this trade until about right here. Why? Because as long as there's downward pressure, it's not going to put me in a trade because it knows it's saying it's smart enough to know that, hey, Herschel, this can continue down. It waits until we get some buy pressure back to the upside as a signal that, okay, maybe the sell-off is over. So anywhere, I can't tell you exactly where it would have put me in because it has its own algorithms, but anywhere, instead of 15%, anywhere from 23 to 18% is where I can comfortably say I know it would have put me in somewhere in this ballpark before it ever put me in at 15%. So it saved me 3.5% of being in the negative, if you will. So now it's put me in the market again. And what am I doing? I am waiting for the market to come up 15% at least, and then this will be a closed trade. So we continue to, that's 2 out of my 5. That's 2 out of my 5 potential trades. So I have $200 in the market. Play it forward. Boom. So here, this particular trade right here hit my 15% and we're in profit. And it's so smart. If you notice, 15% was right here, thereabout. It probably would not have closed me out until we were around 16% or so, because the same technology that read this downward pressure here is the same technology that reads the up pressure. So if even though I have 15% as my sell point target, profit target, if the pressure upward is strong enough, the market, the DeFi is not going to sell me out. It's going to allow me to continue to ride with the market. That's where some of that intelligence starts coming into play. Even though I told it to give me 15%, it's smart enough to know that if it's going to give me 25, it's going to take it. All right. So now this particular trade is a closed trade now. This is a closed trade. So that's one win. And let me see, how can I signify that win? So this is a win. That's a winning trade. I probably should do something different with the colors, but let's see if I can get something. Close enough. Close enough. So that's a winner. And I want you to be able to see this. Okay, so that's a winning trade. I'm still in this trade. This $100 now goes back into the kitty of the 5 that I originally had. So I got 100 outstanding here. This 100 that went in here goes back along with the $15 profit. So this $15 profit off of this $100, because I made 15% off of $100, not the 5, the 100. So that's $15 profit total. Now I have 400 sitting in the wings, waiting to continue to trade, and 1 active trade still going. Just waiting for the next entry or exit. So now a peak has been created in the market, and it would have been one of these two. So I'll just go off of this one, waiting for the market to come down 15% before it puts me into the next trade to the downside. Play it forward. Once it hits one of the two, so right now I'm waiting to either get into another trade or for this trade to exit me out. One of the two is what I'm waiting on. And boom. It may, yeah, here we go. So the market came down 15%. Get over here. It puts me in this trade. Now I'm waiting for it to go back up 15% to take me out. That's only 12. So I'm looking for it to get there. Now I'm back in twice. Boom. Winning trade. This is another winner. Went in here. I'm sorry. Went in here, closed me out there. Come on. Another winner. Okay. But I'm still, well, I was still in this trade over here, but guess what? Price went up. It took this one that I've been in for a while and closed me out. But what did I say a few minutes ago? The technology is smart. So the likelihood that it would have taken me out at 15 is low. Why? Because we had this up pressure right here. So this probably would not have taken me out until this red candle started giving some sell pressure and taking me out. So I'm going to take the 22% profit on that trade. I'm not going to cover this whole thing up with yellow highlights or what have you, but here, copy. Here we have another, and I'm just going to do it from the other side. Come on. Do it as if we did it from over here. This was a winning trade that we originally took right here. So that's 3 winners in started on the 28th. So now this would be somewhere around the 12th of the month. So we've earned $15, $15, and $15. Now, That may not sound like a lot to a lot of people, but when you start stacking those on top of each other over and over and over again, it becomes relatively significant for many reasons. Number one, we're not risking a whole lot on each individual trade. And in just a second, I'm going to show you some of the more advanced features when we put in our advanced cost averaging. But you have $500 on this trade. You are you're about 2 weeks into, well, actually, yeah, about 2 weeks into trading this particular coin from February the 28th over to March the 12th, 14 days or so, and you've made $15. I'm sorry, you've made $45. Actually, a little bit more because we got 22% on this one. So let's just say you've made a little less than $50. So that's about a 10% return on your money in 2 weeks. Conservatively, where your assets were in your control at all times. Now, I want you to think about a person that may have come in and made the decision and said, you know what? I want you to put me in trades every time it pulls back 10% and goes up 10%. Well, think about this. When we first got in, this came down more than 10%. And it would have put me in this trade and it would have had me closed out at 10% right here. That would have been one winning trade at 10%. Then the market went up here. I'm just giving you some examples of how different people will trade this differently. Well, it went up, created another peak right here, pulled back, not quite 10%. So it moved over here to our new high, and boom, 10%. So before we ever even got into this trade at 15%, guess what? We would have already been up or had two positive trade winners at a lower percentage because we're getting in and out of the market faster. This is getting us an extra 5% profit. This is getting us in at a more conservative entry point, but this is churning our money faster. So these are some of the things that as you're going through and setting up your grid, each individual will have to make those type of decisions for themselves. And I could play out that 10%. Anywhere you see 15%, you're going to see a 10% profit as well. Okay? But you could also see yourself in a whole bunch of trades in the same price range as well. So that'll come later with more training or what have you. But I really just want to give you an idea of the power that an individual actually has by being able to program or provide the instructions to the bot for what they want it to do for them. So here we go again. I'm looking for 15%. Come on. We're 15% on the next one. So right now, all trades have closed out positively. All trades have closed out positively so far. We have a new, well, it didn't matter even though I'm moving it. It would have moved over here from a new high, and we would have been in this trade. You see this down pressure? It probably would have put me in right here. All right, so now we're in this trade. We're looking for it to come back up here. And or to find the next trade. So we We have a new high, a new peak in the market. So I'm looking for 15% from there. And guess what? We're in this trade. We're in this trade right here. So now I'm back in 2 trades. Waiting for this one to get to 15%. 2 of our 5 trades are active. And then what happens? Boom. Market drops what? Another 15%. So now I'm in 3 times. Only have 200 left in the kitty. We're getting close to being able to wrap this up, but I really want to show you the power of the advanced cost averaging mechanism that's built into the system as well. That keeps a person from having to manually sit and watch and manage this 24/7. You know, it's something that you can actually glance in on for those that, just don't want to give it time. But for individuals that, still want to trade, you can play with it and tweak it on a daily basis or even multiple times a day, if you like. And it's playing itself out. If you notice, this is one of those situations where hold on one second, sitting up here talking, and is this 15? No, didn't make it. So we're looking for here from the last high. All right. So right now we have 3 trades in the market that's just hanging out. It's just hanging out, doing nothing. But if you notice, I'm going to stop right here. This trade that we went in right here, how negative are we on that particular trade? Let me do this. Get rid of that. Get out the way. If we come at this, look at this first trade right here, and look at where price is. This first trade that we're in is negative 22%. So we have the ability to cost average our way out of this negative. What does that mean? Remember before, and I said we had $500 on this, and I don't want to make it too confusing, but let's just say instead of telling the system we were willing to go into 5 trades at one time, and let's just say we told it we were willing to go into 3 trades at one time. But we also wanted to have, advanced cost averaging built in. Okay, what does that mean? I'm going to show you right now. So with the advanced cost averaging, it would take the other $200 if we told it to allocate it for large pullbacks. Okay. I'm just trying to get this back up to where we can see it better. Matter of fact, I'm going to take these winners off. I'm going to take some of this stuff off just so you can see the screen better and understand what I'm talking about a little bit better. So it's not quite as confusing. without me just wiping everything out at one time. All right. So we had our winners early on. All good. Now we have these three trades that are still active and one currently searching because we had 5 trades allocated, or 5 potential trades being allocated. But we're going to change those 5 potential trades and just make it be the 3 potential trades. So that means we would have $300, still the same $100 per trade, but we took 200 of it and said, if the market pulls back, I'm just going to do 20% for the sake of this conversation. If the market pulls back 20% on any trade that I have open, on any one trade that I have open, I want you to place another trade for $100 to offset it and help me pull my cost average down and put me in a better financial position. What does that look like? Well, what that looks like is this. Pretend like, I'm just going to draw a box here so we know where this trade entered. And then I'm going to get rid of this so that it's not confusing. I'm going to get rid of the rest of the stuff that's on here. All right. So now, this is the trade we're looking at. Imagine this being just totally isolated or on an island by itself. Okay, no other trades exist other than this one. We were trying to get 15% profit. But what has happened is the market has pulled back on us 20%. Okay? Market pulled back on us 20%. That's going to go away. So, I might have to use one of these. Market pulled back 20%. Just going to use this line right here. Boom. Which means I bought $100 worth of this coin. I'm going to draw a line across. That means I bought $100 worth of this coin right here. Let's say at 44.03. At 44.03. And then the market pulled back to 20% negative, which would have been around 36. Which would have been around 36. What did that do? Because I had the system set to give me a cost average trade if it pulls back 20%, right? So it goes in and buys me $100 worth of this coin right here. Okay? It bought me $100 worth of it right here. Earlier, when we originally went into the same trade, we bought $100 right here. But think about it. When you buy $100 worth of something that's $44, if I bought something that was $100, and I'm going to divide that by 44.03, that's going to give me, oh, I did something wrong. Hold on. Divided by, okay. That's going to give me 2.27 injective coins, okay? Remember that. I'm just going to round them off just for easy math. That gives me 2.27 injective. All right. When the market pulls back 20%, I'm buying the same injective and I'm putting the same $100 on this same trade so that I can cost average and bring my price down, that I have the amount that I have invested in this trade, to bring it down. What does that mean? When I take that same $100 or another $100, if you will, and I come and I buy it now at 36.34, what does that do? Equals, that gives me 2.75. So I'm going to go here. And again, this is all rough so that you guys can get an understanding of how this works. And I know there's some mathematicians and some people out there that are really going to understand what I'm saying and run with this. But what happens is now I have a total of what? 4 point, let me add them together. Now, I'm doing this so you can get the concept, but the system does this for you. You just going, it's good to know what's happening, but these are the things the system is doing for you. It would automatically do these calculations, and if you have an advanced cost average trade in there, it basically isolates it back to this trade and 2.75 equals. So by doing a cost average, it brings the amount that I have spent between the $100 here and the $100 here. If you notice, when I bought here, I only got 2.27 injective. And when I come here, I got 2.84 injective. What does that mean? The significance of that, I have more injective at the lower cost. So as the value increases, what I've done is I have brought where I bought this down. I've brought the initial price of what I bought injective for closer to me. Okay? So it's almost like I bought all of this right here now. Why is that significant? Because if I'm in a cost average trade right here, if the market gets back to like it did right here, what happened? I'm actually at break even on this trade that I placed up here because I averaged it out. I did a cost average trade and brought my entry price down. I could actually do another cost entry. I'm not going to in this particular instance, but if it was to drop another 20%, I could have the system place another cost average, or the system also allows me to go in and do a manual cost average trade, which if I were to do that here, or even here, what would that do? That would get me more injective. Yes, I'm in for another $300, but my average cost then would do what? Come down even further. It would come down even further. What is the significance of that? Now the market does not have to get back to this original price way up here that we were waiting for it to get to in order to get my 15% profit. Now, if I bring my entry down, even if I'm still working to get my 15%, I still want my 15% profit. Well, guess what? Now, Price only has to get back to here for that to happen, not all the way back here. So I'm going to go ahead and cut it off here. I know it's just getting a lot longer than I originally anticipated or wanted it to, but this is just an idea of how the system actually works and some of the functions and features and things like that that's inside of it that can help a trader be more profitable. But the thing I want you to understand is what I just showed you on the screen. You do not need to know how to do to get started. A lot of these things start becoming intuitive as you go through the process. And like with anything else, I am not a financial advisor. I hope you do not take any of the information that you've received in this video as financial advice. It's just information about a tool that could potentially be a value add to your investment / trading journey. So I welcome you to get back with the person that may have shared this with you if you're not already signed up, and learn more about it, and just know that there's a full team of people behind the project that is more than willing to help with their regular trading or regularly scheduled trainings and back office information tours and customer support. Until next time.